Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of trading and uncover stocks exhibiting unique characteristics. Today, we're putting a specific microcap stock under the microscope, CIIT ticker CIIT. We'll explore why it's flagged on our hard-to-borrow screener and what that could potentially mean. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show CIIT ticker. Let's talk about CIIT. This is a micro-cap stock, and interestingly, its sector is currently unspecified. What really caught our attention with CIIT isn't its recent price action or trading volume. In fact, it saw 0.0% change today, over the last 5 days and the last 30 days. Today's volume was 0 shares, with a 30-day average volume also at 0 shares. So, why are we looking at it? It's all about a hidden metric that suggests significant underlying scarcity: its cost to borrow fee. What is cost to borrow and why it matters? Geographic CTB explanation. When a stock is hard to borrow, it means there's a limited supply of shares available for short sellers to borrow and then sell. To borrow these scarce shares, short sellers have to pay a fee, known as the cost to borrow, or CTB. This isn't a one-time charge, it's an annualized interest rate paid daily on the value of the borrowed shares. So, if a CTB is 100%, a short seller is effectively paying 1% of the value of a short position every 3.65 days. The higher the CTB, the more expensive and risky it is to maintain a short position. Why this stock is hard to borrow right now. Highlight CIIT CTB, 890.4%. Now, for CIIT, this is where it gets interesting. Our screener shows an annualized cost to borrow fee of a staggering 890.4%. That is an incredibly high fee for short sellers to contend with. While the exact number of shares currently available to borrow is unknown, a CTB that high strongly indicates extreme scarcity in the borrow market for CIIT. With an estimated float of just 7.3 million shares, any significant short interest could quickly create a very tight squeeze scenario. Our internal composite squeeze score for CIIT sits at 43.3, which indicates a moderate but notable setup, primarily driven by this astronomical CTB. Squeeze mechanics explained. Show animation, short squeeze process. So, how does a short squeeze work? A short seller borrows shares and sells them, betting the price will fall so they can buy them back cheaper later, return them to the lender, and profit from the difference. But if the price starts to rise, or if the cost to borrow spikes like it is with CIIT, short sellers face increasing pressure. They might be forced to buy back shares to cover their positions, cut their losses, or simply avoid paying exorbitant daily fees. This buying pressure further pushes the price up, triggering more short sellers to cover, creating a cascading effect known as a short squeeze. Dilution risk check. Show graphic, dilution warning. One crucial factor to consider when evaluating a potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total share count and potentially lowering the value of existing shares. For CIIT, we've conducted our checks, and we found no recent dilutive SEC filings like SMINUS-1s, SMINUS-3s, or 424BS in the last 90 days. This is generally a positive sign, as new share issuance can flood the market, offsetting or even negating the buying pressure from short covering, making a short squeeze much harder to achieve even with a high cost to borrow. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show CIIT chart with zero activity. Despite the current lack of trading volume and price movement in CIIT, that 890.4% cost to borrow is screaming scarcity. However, it's vital to remember that a high CTB does not guarantee a squeeze. It can also indicate that short sellers have strong conviction in their bearish thesis and are willing to pay a premium to maintain their positions. For CIIT, given the zero volume, any sudden increase in trading volume, even small, accompanied by upward price movement, could be significant. We'd also watch for changes in borrow availability. If those unknown available shares dry up, the squeeze potential could amplify. CIIT, with its astonishing 890.4% cost to borrow, presents a fascinating case study in the hard-to-borrow market. While current trading activity is non-existent, this extreme CTB suggests an underlying scarcity that is worth monitoring. As always, do your own due diligence, understand the risks, and never invest based solely on one metric. If you found this breakdown helpful, please hit that like button, subscribe for more unique stock insights, and let us know in the comments what other stocks you'd like us to analyze.